Hey guys, weekly market outlook. Today is Sunday, 26th of October. An important central bank week is ahead of us, and we got a couple of important and interesting central bank information. First one up, obviously, the Federal Reserve. The Fed is expected to cut rates. Let's see if that's going to happen and how this might influence and adjust market direction. Bank of Canada just also due, plus obviously European Central Bank at the Bank of Japan. Guys, we have important topics, so let's jump straight to the charts and check out what we can find out in terms of market momentum and in regards to the potential news events kicking in next week. This week has been an interesting one so far as well in regards to the equity market. It was rising in the end somewhat, and we want to find out whether the positive sentiment will continue driving market momentum to the upside or move towards lower levels. In this regards, we should start with the Bank of Canada. Bank of Canada is not expected to kind of give us a lot of hawkish information here. Instead, we will get a likely rate cut down towards the 2.25 percentage point, which might kind of be interesting. If we focus on this news event, we could also say that there might be some interesting optimization chances here. The Canadian dollar has lost quite a bit of momentum, and we want to examine whether this momentum is going to continue potentially. Recently, and that's now the euro Canadian dollar currency pair. The market, based on the daily chart, has been trading on a very super support area, right? So this 50 moving average, we can see, okay, here was broken, but several times in the past, the market really went to the upside when basically testing this level. And the question is right now, is this going to happen again? Is this market sentiment continue in favor of the euro, basically throwing the Canadian dollar overboard? Now, I'd say yes. We've bought the currency pair, and guys, despite you not potentially checking out our website or having subscribed to our monthly packages at fxstrategies.asia, check it out, because now I give you first-hand information. We bought the market when the price was starting to rise to the upside, basically the push here of the support area. And right now, you would have another chance to buy the market again. We still like the look of this trade. We still like the currency pair. It might kind of continue back to the downside here, but the trend, and that's exactly always what we say, or what we praise, basically, or pray, the trend is our friend, and the market momentum leading motivation to the upside is expected to continue. The market motivation here might drive this sentiment further up towards higher levels, which is why we like the idea of this trade and of this currency pair right now. In any case, let's not put too much effort or kind of focus on this candlestick. We shall not delete it as such, but we can also say that the support area seems to be key. And what we have is now our stop loss, to be utterly precise, is about at this level here. Our entry is kind of at this current area, might be slightly lower, slightly higher. I'm not too sure, to be honest. It doesn't matter, because we would say that the initial target could be up here. So imagine you buy at market here. You have a fine range of a stop loss that's not too big when looking at it from this perspective, but you have a big range here in terms of the take profit. And that's exactly why we say this trade might work out, and whether or if the trade works out, we can potentially get multiples in terms of profit out of this trade if the market continues with the uptrend again, causing the market sentiment maybe to basically strengthen in favor of the euro. And that's actually kind of the same story we can observe here right now, which has been happening in the US dollar against the Canadian dollar as well, because we saw that the dollar, the greenback, against the Luli was also doing the same story. It's currently now trading at a bit of a technical resistance area. So the dollar against the Canadian dollar might just change direction somehow. Might have to do with the rate expectation we get here in the near future this coming week, following the Bank of Canada's interest rate decision. But let's stay for now with the US dollar against the Canadian dollar currency pair here. The Canadian dollar might actually strengthen if we get a different view or a different result here. So that would be another chance. So if you want to look for entry opportunities in favor of the Canadian dollar, the loonie as it's called, you might be interested to kind of sell this market short, causing another downtrend here to occur. So the opportunity here in this market looks kind of quite freakingly interesting here. Yet, as I said, I believe we get a rate cut. Whether priced in or not, because it's expected already that the central bank will cut rates. So basically, it's not a piece of news, not a surprise. It might already be a priced in market. So since it's expected, and that's exactly how we like this situation here and like to observe this situation. So long story short, if you look to basically sell the market, you might buy the Canadian dollar against the US dollar here. So meaning to say, dollar Canadian dollar short trade might also work out in this case. That's the dollar against the Canadian dollar and the interest rate decision out of Canada kicking in on Wednesday. We have another interesting rate decision, and that's coming up then on Wednesday as well. Obviously, that has to do with the Federal Reserve. The Fed is expected to basically also cut interest rates, and the Fed has all what it's needed in their hands. We got a bit of a weaker workforce, right? That's important because we have the two pillars of the central bank. First of all, it's the inflationary momentum, so basically keeping or containing prices and causing them not to rise too much. On the other hand, what we have is the full employment as the one important story, and that's now maybe the forefront of what the Federal Reserve is going to do, because rising prices are not going to happen as such as we speak currently. We see that last week consumer prices actually fell when they came out. They fell slightly. So that's exactly something where the Fed might say, look, prices kind of starts to weaken somehow again. And now we can focus fully on the full-time or full employment status, which is why we would say that the expectation here with a rate cut from 4.25% down towards 4% as the Federal Reserve funds rate is likely going to happen. Likely as in with at least a high percentage of market participants' expectation. The Euro-US dollar currency pair has started to weaken somehow. I'm still an advocate of a bit of a stronger market, right? So I don't expect a much upside in the Euro-US dollar currency pair, but instead I would expect the market to rather weaken. First of all, the move of the euro-dollar currency pair to the upside has happened more or less since Trump took office. First. Second, it was always expected that the US dollar is going to face rate cuts, a series of rate cuts. And since now the rate cuts are already more or less fully priced in, a lot of weakness, renewed weakness in the market might not kick in as such, but instead we might see that the market sentiment here, especially based on this strong technical resistance pattern, is going to kick in, which could tell us that the market's momentum back to lower price levels might be what we should focus on, and which is why what we like to observe here right now, that we want to focus on potential chances that the market is going to weaken somehow further. Supportive technical levels, and those are similar ones we mentioned earlier. Resistance here, support. We've tested or we've seen those levels. This was maybe broken a bit too much, but that would tell us that right now the market is then at crossroads at the moment. Whether we see another break to the upside can happen, or whether the market takes another nosedive and weaken might be on the eye of the beholder. But the question right now is the trend direction. For that, we might be also better off to get further insights information in regards to the US dollar index, and that one has been rising. Basically, it's a couple of other currencies against the greenback, against the US dollar. I'm not too sure exactly the Canadian dollar, Japanese yen, the euro, with the 7% of the majority. Obviously, it's just the euro US dollar exchange rate. But meaning to say, if the dollar index rises, it would cause the euro dollar to weaken, the pounds to weaken, the Aussie, whatnot, other currency pairs to weaken further as well. And what we can see based on the weekly chart is that the market is about to rise somehow further. So the rise of this potential market level here, and it doesn't matter the number of the area we focus or we take into consideration here, the trend is important for us. So if the market starts to appreciate, we would see that potentially further strength in the US dollar might kick in, which would cause or translate towards further weakness in the euro US dollar currency pair, among others, causing the market momentum to potentially weaken. And that's exactly the same story we see here at the moment. The pound also turns to lower price levels. The pound traditionally, as of fairly recently at least, slightly on and at weaker levels. Pound US dollar weakening, euro US dollar weakening. So we saw quite a few interesting currency pairs heading towards lower price levels, and that's expected to maybe continue as the market sentiment really unfolds. And we can see there are certain levels, certain important and interesting levels, which might be worth taking into consideration. Back towards the economic calendar. Again, the federal funds rate is one thing, but also the press conference just about half an hour later. Remember, we have a time change in the Eurozone, obviously. So winter time is kicking in here on Monday. Frank, a reminder to my own self to just make sure that I'm not going to forget about this. In any case, the lower interest rate might also help liquidity supply towards any financial market, in particular the equity market as we speak, right? And we could see that's the S&P 500 that basically last week the market was already breaking higher. And that move happened at an interesting time, right? So in the afternoon US trading, it happened after or when the news came out that consumer prices in the US weakened towards expected on a monthly basis. I think it was 0.4%. We came down towards 0.3%, meaning to say, hey, prices weaken. Now the upcoming Federal Reserve meeting might be used by Jerome Powell to cut interest rates because consumer prices were not rising. Instead, they were just continuously falling further, giving Jerome Powell more leeway in order to cut interest rates, potentially helping him in order to cause these markets to basically rise somehow further. Next one up, this coming week, starting tomorrow, is going to be the Bank of Japan. The Bank of Japan traditionally has kind of one big issue. First of all, aging population, that's two issues. But second, the high debt burden, I think 270% or something of GDP. So basically, entire Japan would need in manufacturing and services to work 2.7 years, if I'm not utterly wrong here, in order to just pay back their debt, right? So that means as well, the economy is high of debt, and that means the room here to cut or to raise interest rates for the Bank of Japan is extremely limited only. Meaning to say, in this case, here we expect that the Bank of Japan's policy rate will remain at or lower levels below the floating 0.5% point. That translates as well towards something which is expected at the moment, that the US dollar against the Japanese yen is going to potentially strengthen further. The Japanese yen has weakened against other, or say most currencies, technical resistance levels. The market looked like it was maybe about to break potentially lower. What we see, though, is that the Japanese yen has been weakening against other currency pairs, and we can name them, right? So euro dollar moving higher as well. Euro Japanese yen moving higher as well as we speak. We can see this here, euro Japi moving to upside levels. The pound Japi, despite, as we said, slightly weaker pound here, instead, against the Japanese yen, the pound Japi here is also moving towards higher levels. So we see that against other currencies, the Japanese yen has seemingly kind of not much of a say. The interesting part also, in order to kind of interconnect other currencies or any currency, the Japanese yen is always the counter currency. Euro JPY, US dollar, Japanese yen, pound, Japanese yen, right? So the Japanese yen is always the counter currency. So that makes this kind of quite interesting to compare the strength of other currencies by simply saying you could just look at the 4-hour or say a daily chart and compare the RSI reading here. You can do your own research online. There's kind of plenty of articles out there. The RSI is quite interesting here if you want to compare this market or this level. Dollar JPY daily chart, we are trading here at the 65 level. So the Euro JPY daily chart is currently trading at the 68 level. So considerably the euro is stronger than the US dollar against any other currency. The pound JPY trading at 61. So euro stronger, US dollar less strong, the pound even less strong or weaker as compared to the other two currencies. That's one lesson on sideways here. On the side, you can observe while comparing it here, just showing the charts here as well. That's how we did, right? So we look at the pound Japanese yen currency pair and compared the daily charts, the RSI pattern here, pound JPY at this level, Euro JPY at a higher level. And when looking at the US dollar Japanese yen daily chart as well, we can observe it's already as well at a higher rate. So that's the importance as well when it comes to this currency pair. Obviously, we have something else brewing, and that's coming from the European Central Bank. The ECB is not expected to cut interest rates. Again, we have a rate cut, or we've had a rate cut only in June last year. So, this year. So quite a while ago. What if we get a surprise rate cut? That might harm the euro. The euro might weaken further. Is this going to be expected? Well, we have issues with unemployment in a way. The inflationary momentum is under control. So I don't see much of a chance that this is going to happen here during this meeting. But a surprise rate cut would obviously harm the euro against the other currencies. We could look back towards the euro against the US dollar currency pair, but also obviously, of course, we have to check how this would potentially harm our euro against the Canadian dollar, which is worth a consideration here. So stay tuned in regards to this currency pair. Yet my understanding and my expectation is for this week that the European Central Bank, namely Christine Lagarde, is not going to talk much about it. She might say, "Look, we will focus on the incoming data this week and beyond to determine the future price motivation in regards to a potential rate outlook." For now, there might not be too much to say, and I don't expect also that giving the considerably different interest rate right now, main refinancing rate for the European Central Bank currently sits at 2.15%, whereby the Bank of Canada sits at 2.5% as well, and the FOMC, or say the Federal Reserve, sits at 4.25%. So we can see that the European Central Bank is already at considerably lower rates, and that gives them maybe not much of an advantage in order to kind of cut rates even further. Other news this coming week, we have a few. We still have the core PCE, the personal expenditures price index. That one is going to be interesting as well to see and to determine potentially upcoming movement in regards to the further updates in regards to price development. So it might be interesting to observe how the market goes here and how much of a momentum we can see as the prices will move. So that one is going to be interesting as well, if the information will come out. Again, the information is meant to be tentative due to the shutdown in the US. I believe we have the second longest shutdown currently. And it's not or there's no end at the moment, at least according to our information inside. So we have to see if and how much news we will get. In general, obviously, when looking at markets, we said the stock markets are about to move higher again. Yeah, we saw that prices in general were moving to the upside when it comes towards the S&P 500, the Nasdaq technology index moving higher as well, the German DAX falling suit somehow. What we saw, and that were the recent statements also in regards to the Ukraine war plus other geopolitical tensions news. Donald Trump pointed out trade talks in regards to Canada being halted due to some whatever advertisement within the Canadian side. We could debate about this for ages, but what we see is that oil prices have been rising somehow. So that would be something which are worth a consideration. Here at the moment, the market sits at around this technical resistance area. And this technical resistance area here might tell us that the market might be worth a consideration in regards to falling prices in the near future. However, in general, what we can see as well, the market momentum is kind of quite interesting here when it comes to the crypto market. Crypto has not followed the upside in the stock market fairly recently, and that's why now we want to check out on how much momentum we might see here in regards to Bitcoin among other tokens. And just right now, as we speak, over the weekend, what we saw is that the Bitcoin market started to appreciate even again. So Bitcoin here, and now this is this week so far today, on Sunday today, 111,300, so like 2,000 US dollars higher. And that might give us now a bit of a boost for other tokens as well. Remember, if Bitcoin moves higher, it oftentimes also takes other cryptocurrencies with it. And the breakout in Ethereum, by the way, tells us that there might be another upside full momentum also happening here in this market. Ethereum moving to the upside. We see XRP moving higher as well. Solana. So most tokens follow suit, and that's now the boost maybe we need in order to see how much momentum we will see in the near future. As most tokens move to higher levels, the question might also be how much momentum will we see in the crypto space even further, in regards obviously also comparing it with the precious metals market. Because if you see the crypto space, in particular Bitcoin, as a bit of a safe haven, we can also debate on the role of gold, and gold prices started to depreciate, right? So this week we saw gold pushing lower, currently trading at a bit of a technical support area. But if gold prices weaken, we might see that there is an input as well and further inflows in regards to the crypto market, in particular Bitcoin. Similarly, we see something interesting here on a side note in regards to what the silver market is telling us. The historical high point has been tested here, and that high point, oops, I wanted to drive, okay, there we go. I wanted to kind of share this information here, because we saw that, why is my indicator here? I wanted to show you the, okay, there seemed to be an issue. I'm not too sure why this is not going to work. I wanted to show you the annotation here. Anyways, maybe some hiccup here from my side. So the information here I see is that this technical pin bar candlestick pattern recently helped the market to fall. As I said, such a strong statement here, and initially market earlier this week slightly higher, to then see end of the week market moving lower. It might be something interesting to see the market continuously moving lower. What if we see also that the end of the month of October will give us this strong bearish pin bar candlestick? Then we might see that the market will start to depreciate even further, basically negating all the stuff we've seen. The last time it happened like this, I think before it was in the 70s or 80s, that the markets were moving sharply to the upside with the two trading brothers, the Hunt brothers back then. But here we saw 2011 market moving sharply in a parabolic uptrend to the upside, to then see a considerable fall here later on. Whether we see such a strong fall in the near future might be debated, or might be debatable. But right now, at least, what we can see is that at least lower levels, like previously traded levels, could be tested, and hence obviously kind of maybe giving us the chance to get into the market again at cheaper prices. Because if we see some correction in equity markets in general, then obviously the markets which had dramatically started, or kind of which had dramatically moved to way higher levels, are the ones which also give way the most. So silver might weaken further. Those stock markets, or those equities, those stocks which had moved the most to the upside, might also be the ones which are about to give way the most moving forward. Guys, leave your comments under the video. If you have any questions, reach out to us, or leave them under the video, so we will get back to you in this regards. As said, we have a strong central bank week. Bank of Canada, the Federal Reserve, the Bank of Japan, as well as the European Central Bank, plus other news in regards to markets and in regards to equities. Earnings season in full swing in the US. That might give us also further information and much more room and important information in regards to trading opportunities. Stay tuned. Thanks for tuning in. Have a great week of trading, and see you then. Take care. Bye.